Now, we've all heard before that traders normally lose money. This article states that 95% of all traders actually lose money. Another article actually states that 80% of traders lose money, 10% is profitable, 10% barely break even. Now today I'm not going to share with you, a trading secret, a trading strategy. I'm not here to share with you a course that I have. I'm here to really share my story in terms of this journey, because at the starting point when I was an undergrad, I was doing trading a lot, but my perspective now is very different. I think there are some parts, some tips that I can really share with you just in case you're at this starting phase in terms of your understanding on financial markets. And towards the end of the video, I'll be sharing with you my take towards trading costs, because nowadays there's so many trading gurus also. So I'll give you my take on them, and maybe if that interests you, continue watching on. Hi guys, welcome back. Now to start things with, I think I'm somewhat qualified to address this topic on trading, simply because back 10 years plus ago, I'm not that young already. 10 years plus ago, I did have a major windfall when it comes to a particular trade, and let me pull this up for you to see, just in case you're curious about it. This is actually gold per US dollar. I actually did it on a forex market. And if you are into technical analysis, you kind of know what pattern I'm talking about. I actually recognize this pattern. There was increasing volumes. Everything looked perfect. I betted big. I got away with it. It was, if I'm not wrong, close to 100,000 in terms of gains. Fantastic, right? At that point of time, I'm like 26, 27, kind of age. But nonetheless, why am I not big onto trading nowadays? There's a few quick reasons. And the main one, obviously, is I blew a large part of it subsequently in a couple of years' time. Now, I don't want you to have that mistake also. That's why today's sharing, very open on how things are. Because if I look back at the Tesla video that I did recently, I realized that there could be a lot of people, a lot of viewers, maybe you also, you've bought in Tesla shares, you're looking at some gains, you kind of feel you know the market already. I want to share with you my story. So hopefully you have a little bit more caution moving forward, because things can go right, things can also go wrong. Don't make the mistakes that I've made. Next part is, I really realized, looking back at many years of track record, I wasn't that fantastic a trader after all. At best, I was probably in the 10% who break even or was profitable marginally. That's why when my amounts of capital started to build bigger, I moved towards investing. I moved towards long-term investing. That is how I'm aligned, and looking forward, I think that is the direction that fits my personality the best. So find what fits you also. But today I have some words of wisdom. Hopefully it catches you right point of time, and it starts off with this. The first tip that I have for you is, if you're into trading, cash out your profits when you can. Now, be it day trading, swing trading, whatever case is, whatever you claim your style to be at, in my opinion, if you don't do fundamental analysis, you are closer to being a trader than an investor. And it works like this. When you have gains, it looks like you have gotten things right, but there are always bad patches. And that's why when you cash out, you have a discipline to cash out. It's going to save you, especially when things go wrong. Now, if you start off with your trading pot of say $20,000, you've made a $10,000 gain. Very possible, especially with leverage. You see swings up, it's quite easy to clock 50% gain on your account itself. As you see your position build, you see your P&L grow, you can actually cash that money out. Now, my suggestion is strongly cash that money out. Stick to the 20,000 you have invested, and there's a few reasons why. When your account builds bigger, you tend to get more emotional. That's how I actually saw my journey. You would think that you've gotten it right the first time around, you definitely get it right again the second time around. If you bet 20,000 and made 10,000, you most likely bet 30,000 down. And that's why if you start the year with 20,000 and at the end of the day you have a 10,000 gain, cash it out, move it to your bank account. In that case, if you're rolling on profits rather than your capital, it makes it a lot less pressurizing to things. So you're a lot less emotional. So that's my simple suggestion. And that means you give up on the main thing. When it comes to trading, you give up on compounding money. It's very ugly to hear, but that's my strong suggestion. Look to simple interest, at least for a few years. Why is that so? Because if you put 20,000 and you have a 10,000 gain, you cash it out, you're only back to 20,000. You limit your position size, correct? You can't really compound your money, unlike investing where it's all about holding positions. Don't cash out. Trading perspective, you have a gain, you cash out, you stick to what you have done well, what size is fitting for you, so that you can sleep well. So be very patient. If you made 50% gains in 1 year, take it aside, continue, stick to the formula. Don't think you can keep compounding 50% gains. It usually doesn't work like that. The second tip I have for you is to trade less. Now, if you're in the trading community, you may have heard before, overtrading is one of the biggest risks when it comes to new traders and what is overtrading really. Now, but to start things with, there's right now a lot of pressures, a lot of seduction ideas that entice you to get into overtrading. Things such as copy traders, things such as zero commission trades platform. Now, that is a separate topic, but nonetheless, if these platforms give you the perspective that you can keep trading, keep making marginal gains, you'll definitely be financially free at some point of time. Avoid that, because overtrading really gets you into trouble, because in a lot of ways you need years of experience under your belt before you know your strengths, your weaknesses, as well as going through some mistakes the hard way. Trading more exposes you to more mistakes. It doesn't mean that you have more opportunities, you equally have more exposure to mistakes. This article very interesting from Dollars and Cents. He was interviewed by Dollars and Cents on Rainer. Rainer is a trader, probably a well-known trader in Singapore, and he did share very generously that he took 4 years to really solidify his trading strategy. So think back again, if you haven't been trading for 4 years at least, what are your odds that you're a very competent trader? Don't look at your recent 1 year gains and think that you have nailed it already, because maybe that is too small a segment size to really know whether you've developed that trading habit or right trading psychology. I've seen before teachers who in their school holidays become full-time traders. And let me share with you, trading full-time actually is very stressful because income is not certain and you do have ups and downs. In any case, trading is very addictive. It gets you glued to the monitor itself. You lose on personal life if you don't know how to handle things well. In any case, if you look around, millionaires, billionaires, most of them build businesses. Most of them have very sturdy careers. They are not built because of trading profits. So keep that in mind. If you want to be financially free, you want to grow your wealth substantially, your odds of doing it is much better building business or committing to your career than trading full-time or trading on the sideline and generating income from that sense. Now, the third suggestion I have for you is don't swing for the fences. Don't try to make a giant gain straight off. And before I show you what trade got me into trouble, let me invite you to smash a like so more people can see valuable content like this. And again, press on subscribe if you haven't already. Join our family, become more financially savvy. Now, this trade that really blew a large part of my gains from the gold US dollar was actually I was shorting on Dow. At that point of time, if you're not wrong, Dow was about 12,000 points. And at that period, there was a lot of instability, there was a lot of crisis if you're not wrong. I can't remember what actually gave me that perspective, that that confidence that Dow was definitely heading downwards. The risk of going up was so little, Dow was definitely heading downwards. I actually kept that position for more than a year, and in the end it accumulated losses bigger and bigger to a point where I eventually cut losses. I closed the account, almost blowing all my entire gains away. So in a lot of ways, trading is like playing poker. In a sense, if you keep betting all in, all it needs is for a particular trade, a particular situation where it turns out unfavorably. You have calculated odds, but things change, you did not realize it, or you were just unlucky. All it needs is just for one event, it blows your account up. It really brings you back to square one. That's why, again, stick to the few suggestions I have for you today. First, cash out on gains when you have set a milestone, cash out. Second, trade less. And third, don't swing for offenses. Don't go for this giant windfall gains and really underestimate risk. I have this to share with you. Read this together. In the minds of a trader, there's always this: quick returns is worth the risk. And rarely traders think about what would happen if they lose. So if that really is something that hasn't gone through your mind too much, maybe today is a good suggestion, a good warning. Because if you have gains, really keep them before you end up relinquishing a large part of it, because that's really unnecessary. Now, at the start of the video, I promised to share with you my thoughts on trading gurus and trading courses. Now, it goes with this. I believe that these people who actually set up these courses, these systems, are actually successful traders themselves. Yes, there's always that 1 out of 10, 1 out of 20 guy or girl who's a successful trader. And very likely they have a positive track record to show you. I don't doubt that at all. And deep down, they know that they are that special elite group that has that psychology system really figured out and customized to their style. But my main concern is whether that is really transferable to each and every person that they mentor or goes for that course or reads their book. Because if we think about it critically, these courses have been around for many years. Why is it that 10 years ago, only 10% of people are successful traders? Right now, it's still 10%. It's very likely these courses, these concepts are not easily transferable. Most of these successful traders are self-taught. They've been through the fire, they've customized and figured a method for themselves specially. So kudos to them. My only concern is whether it's transferable to the masses or not. And to end things with, I have actually a video that I'd like to introduce to you also, just in case you're on board with investing. Investing is also not, a given success for everybody. I have this video that's previously done. I don't know if you've seen it before. If not, inviting you to that. In that video, I'll be touching on anchoring biases, where anchoring biases actually hurt investors in a lot of ways. And if you haven't heard of it, look for the video. I think it gives you a further tip or two to help you in your financial journey. With that, I'll sign off. I'll see you in that video. Take care and goodbye.